What's up, everybody? Steve here. If you are not aware, mortgage rates are rising. I'm going to talk about this article. I'll link it down below, and I'm going to give you some thoughts and maybe some tips moving forward as well if you guys are in the market to purchase a home, or even if you're investing in real estate. It goes on to say mortgage rates hit 3.22%, highest level in 20 months. About a year ago, a 30-year rate stood at 2.65%. Now let's talk about that real quick. Now, if you locked in, let's say you guys were taking on a $400,000 mortgage and you locked in at 2.65%, say a year ago, 20 months ago, your payment, principal, interest, taxes, insurance, 30-year, fully amortized would be $1,611. Now, at 3.22%, you guys would be paying $1,734. Now, that's a difference of $123 per month, and ultimately, that's a reduction on purchasing power, and also, that can make or break, essentially your loan and how much you're going to be able to afford. And we'll talk a little bit more in detail on that. The article goes on to say many economists expect mortgage rates to rise this year after the Federal Reserve announced last month that would begin dialing back its monthly bond purchases, which are intended to lower long-term interest rates to tamp down accelerating inflation. But even when the expected 3 rates increase in 2022, the Fed's benchmark rate will still sit below 1%. Now, I talked about this in other videos, but the Fed has been buying up to 120 billion bonds per month, and that has assisted in causing the inflation that we're seeing today. Now, in January, they're essentially cutting that in half to 60 billion this month, and they plan on to taper that down even further. And I would say that we're going to anticipate higher mortgage interest rates in the future, especially this year. I think we're going to start seeing them rise, because they're anticipating, three interest rate hikes this year. Now, don't get me wrong, the interest rates are still historically low. Money is still extremely cheap. But we will see higher interest rates, and I think that we will see an effect when interest rates do rise. The purchasing power is going to be limited, and I think, we will start to see certain markets stabilize, flatten out. Now, I get a lot of questions, should I buy right now? And look, if you're buying for your primary residence, you're going to be there for a long period of time, you're comfortable with the mortgage amount, then, I would say go ahead and do that. I think it's better than renting. And in many cases, if you do the rent purchase calculation, basically what's going to cost you to rent that same property compared to your principal, interest, taxes, insurance, deferred maintenance associated with buying a property, most cases you're going to actually be paying less. Plus you have additional write-offs. Talk to a CPA on that, of the benefits of home ownership. So in many cases, it still makes sense to buy a property. I encourage you guys to buy right. Make sure you live below your means. And also, one thing that is, I think, extremely important is be aware of rising costs. Real estate taxes are going up. Insurances are going up. I did another video on that as well, where I spoke to a local expert in Florida who really just talked about the rising insurance rates, and it's affecting a lot of people, even people that have roofs that are shingle roofs that are a little bit older than 10 years, they're getting hit with rate hikes, and they're trying to figure out how to put a new roof on their property. So be sure to check that video out. And other expenses are going up besides food and everything else. You have utilities that are going up. And a lot of times, $50 more a month, $100 more a month, $200 more a month can really make or break people. So I think it's important that you guys get into a mortgage that's very comfortable, that you guys have a buffer, that you guys have additional money left over at the end of the month to save and put toward emergency funds, and also to invest as well. I will keep you guys updated on future rate increases. If you have any questions, comment below. I'll try to do my best to respond to them, and I appreciate every subscriber on this channel. Thanks a lot for being here, and I'll see you guys on the next video.